Well, good morning, traders and investors. My name is 𝗧𝗴𝗀, and I'm the Senior Strategist for WealthPress. Please welcome to our midweek roundtable. I have my usual co-host, 𝗧𝗴𝗀. Jeff, welcome. How are you today?
I'm good. How you doing, Roger?
I'm doing great. And by the way, before I forget, folks, write down our email addresses. If you have a question, if you have a comment, if you have feedback, good, bad, ugly, we'll take all of it. And if you have any ideas for us to talk about, please send us an email. If you want to reach out to Jeff, and you could reach out to both of us, it's all good. Jeff at Joy of the Trade. That's Jeff at joyofthetrade.com. My email is support@marketgeeks.com. It's an email I've used forever. It'll get there to me quickly. Jeff, how are you today? How are you? What's going on?
I'm doing well, Roger. How are you?
I'm doing pretty good. It's a fragmented week. I know that there's hurricanes going through the other side, not our side, but the other side, the west side.
We got lashed with some bands yesterday. It was whatever. Just summer rainstorm.
Yeah, just more rain over here. How are you doing? Did you have a nice 4th of July weekend?
Very relaxing. Very relaxing. Can't complain. You?
It was very nice. Just had a nice barbecue and with friends, family. 𝗧𝗶𝗺𝗲 stopped by. He was here.
I saw fun.
My
cat,
an eternal
photo. Looked fun.
My cat was on the table. I'll post some pictures. I'll post some pictures during this thing.
I would have loved to have been a fly on the wall on that scene.
I would have loved to have you here. Maybe next time you can come. If you come out here, sometimes we'd love to have you. We always have barbecues every Sunday on in the summer. You know, summers here are just wonderful. Yeah. So I always tell people who listen to me that typically when you have big holidays, and even if you don't have big holidays, if you have any time that the week is off, even a tiny holiday or a short day, it throws the week completely off. And now this is a real major example because, as everyone knows, 4th of July holiday is one of the biggest holidays in the country. A lot of people take off, they fly. Airports were packed. I was in Bahamas. I'm not sure if you went out of town or you're planning on going out of. You're going to go out of town this weekend. It's probably a smart idea. Less traffic everywhere. But what do you think about trading and making big decisions on weeks that are on fragmented weeks when there's not a lot of volatility? What's your take on it?
You know, it's summer too. So there's long weekends, there's fragmented weekends, there's 2 times of the year, and that's like Christmas to New Year's, but you get a big rebalance trade on New Year's into New Year's Day. People, harvesting tax losses, et cetera, at the year end. But the days outside of the, New Year's Eve and New Year's Day around Christmas are really like dead, right? Like it's like volume is like nil. It's, junior traders, and the summer has a pattern of really getting low volume and like a listlessness to it, particularly after the 4th of July. And it really kind of like, you get like the super summer doldrums in August when Europeans love taking vacations in August. So we are a global market. We still have a lot of players from London, et cetera, participating in all our markets. So that's just the pattern of it. But just use smaller size and be patient. Rome wasn't built in a day. You don't have to make it all in tomorrow, in the next 4 hours, the next 3 hours. We're going to be here. We're going to be giving you great trades. I mean, I plan on being around. I know you plan on being around. So, just take it slow psychologically. Slow everything down a little bit is always my advice in the summer. Don't be a hero in July.
You took the words out of my mouth. This is not a time to be a hero. Yeah, this is not a time to be this is a time to spend time with your family, get away from the markets, hang out, and learn a little bit more, take lower position size, more ETFs, lower exposure, more pair trades. I love pair trades in the summer because obviously you have the volatility will be off. Yeah. So it's really great. What are you looking at? What are you looking at right now, if anything?
The key right now to everything to me is this yield. This bond yield just collapsed yesterday. We were just drifting under 150, and yesterday we went right under 140. And this morning we printed it on, and I'm talking about the 10-year yield for those people at home that don't know what I'm talking about. You knew already because of the numbers. On the 10-year, we printed the lowest yield since February, which was a pretty big move, under 130. And you saw banks get whacked on that yesterday. It's good for growth for now, but what it indicates, what it portends to, is something people are trying to digest. Is this, a phenomenon because there's so much? I think personally, this is a phenomenon because there's so much money when yields go down, it's because bonds are being bought. So bonds are going up, yields are going down. So I look at it kind of like the same thing that's, causing a lot of these stocks to go higher is there's just all this capital that still doesn't have a home. And it's not just the US. We have European central banks printing at unprecedented rates too. And are you going to go buy a negative 30 basis point German Bund right now? Probably not. So you have a lot of people from a lot of different countries that still look at 1.3% for a 10-year yield as very attractive. And they have all this money that has to flow somewhere. Not everything can flow into stocks. That's my view.
My view is very, very similar to yours. And what's interesting, on a technical basis, it's backing out very well, because right now, if you look at, and I'm also talking about the 10-year or the TLT. For those of you who don't trade futures, please feel free to look at the TLT ETF, which is what Jeff and I are really talking about. Long term, they're all very correlated. They all have a correlation of about 95%. But if you look at it, it's reaching for the 200-day moving average. It's still below the 200-day moving average, but it looks to me like it's going to clip the 200-day moving average and revert back down, because the long-term trend is south.
Right.
And we know what thanks to the Fed that we have. I won't get either of us started on the projections that they make and then make asses out of themselves. And then, don't get me started. But the point is that I think we're going to revert lower, and I think it's going to have a big impact on the tech. I think obviously the tech is making new highs every day. I completely agree with you. I think there's just a gross influx of capital coming into the bond market. And they're looking for every opportunity to accumulate more and more every time the price. But the bottom line is, you're not going to prevent a major trend in the bond. It's not going to happen. No amount of inflow.
Well, we both believe, right? We both believe that that the basic materials pullback was a pullback, not a reversal, right?
100%.
Not a reversal of trends. So this is kind of like the inverse of that. If you think that commodities, basic assets, raw materials, oil, copper, steel are going to still go higher, the price of woods, things like we need, are going to go higher because of this monetary policy again, then this yield blip on the downside, or the TLT going up, is something that's going to come back down and reverse again. So this is a counter trend move, is what I think. And I think you're saying the same thing.
I'm saying exactly the same thing. As a matter of fact, I'm seeing what I anticipate is a complete reversal of what we've seen over the last 30 days.
Yes.
Or maybe even more, a complete reversal.
And a shocking one. I think it's going to be incredibly fast. It's going to be like a riptide that just took somebody out to the sea.
I mean, Jeff, the truth is, you just, and what's interesting, we were, I'm more, I do a lot of fundamental analysis, but I'm more of a momentum and a technical trader.
Yeah.
And it's really great to get a perspective, a fundamental perspective. So we were last Friday, shortly, just a few hours after you and I spoke, actually last week, I was in the Ask the Pro session, and there was a trader there. His name was Garrett. I don't remember his last name. He was on there before. He's a pretty well-known guy. He's an analyst. And he was going really into like 80% fundamentals. And I'm going to tell you, Jeff, everything he was saying, just PE ratio, everything he was pointing to the same thing that we're seeing technically and on a momentum basis. It's just a matter of time. And what I'm seeing, all this influx of capital, it's just putting a Band-Aid on it. I mean, you called when crude oil was at 60, between 60 and 65, you said that you think it's going to go up to 100. I
still do.
Yeah, I know you do. And I know you do. And it's right now at 75.
Yeah.
Or thereabouts.
Yeah.
And I also agree with you. I think it is going to go to 100. And I want to remind, and this is, because you framed it in a very good way, the fact that this is just a short-term aberration or a short-term pullback. And what I believe is, I think that people need to realize, historically speaking, that when a commodity trends, when you have trends in gold and oil and interest rates,
this is
commodity, they're not counter trends. They're real trends.
They're multi-year. They're multi-year cycles. Yeah.
Yeah. So I would not be surprised.
And the oil one just started. The oil one's like 6 months old. So it's probably got another 2 years left.
Yeah, the average trend runs about 3 to 5 years, actually.
Yeah.
So you're not far off at all. So my point is, I see a very I see a complete reversal. I see the blue chips coming back up, all the materials, the lumbers, the steel,
Yeah.
all that stuff, the basic production stuff coming up, and I see the tech and the consumer discretionary coming down. Now, with that said, I think it's going to be not as broad. I think the pullback in tech is going to come, but I think we're going to see some upside in the defense stocks, because we've seen a lot of these attacks, a lot of these just the other day we saw another virus being hit through a major internet chain.
Yeah.
So I think we're going to see, I don't think it's going to be as broad, but I think it's going to impact the larger stocks. So I'm seeing smaller Nasdaq stocks and smaller growth stocks still potentially rally, but the large caps, the Nvidias, the Facebook, the Amazon, I'm seeing a downside on those for sure.
As a basic, I mean, I agree with everything you're saying. As a basic rule of thumb for our viewers out there, volume, when you see volume, when you see size come into an asset class, that is a very, very solid indication, especially with momentum. The tools and the indicators that Roger uses to measure acceleration and to measure when the momentum is really starting to ramp. They're excellent. I don't know if you've looked into any of them guys out there. I know you have, but you have some of the best in the business on momentum. But when you put volume with that momentum, what you get, in my opinion, and what a lot of Wall Street pros consider a real move. This is a bona fide move. This is a real move. That's a question you hear a lot on the street. Is this move real or is this move fake? What does that mean? When you have these low volume moves, these counter trend moves, they can be real. I'm not going to say they can't be real. It could be the beginning of something. But until you get what Roger sees on the scanners as momentum breakouts and that institutional push, substantiating the move, a lot of these moves can be head fakes. And you get a lot of them in the summer too. They spin people around. So right now, this move back into tech, out of basic materials, yields, for me, that's a counter trend move. The move earlier in the year where we saw people selling some tech, that's what we're going to see more of. The question is the broader stock market going to hold up when tech starts to get, like when these big tech start to get whacked? Because they're already trading in an incredibly overbought fashion with very low volume, with not a lot of belief, with not a lot of substantiation. And, we're about to have earnings again, and you're going to see a lot of these guys aren't going to make the money. Whenever you get a stretched move on fake volume and you have earnings, I'm telling you, you got to look out, because if you're priced to perfection, if you don't hit that number, they take you out back and it's over.
Agreed. Also, I think it's, and this is the first time I'm saying this. I think earnings expectations on the large cap techs are just getting a little bit too frosty. It's just too much.
Well, they had the excuse for a year. They don't have the excuse anymore. They had an excuse, right? So they were like, and they were blasting, they were beating by 30%, 40%. It was like, wait, what? People are still buying. I mean, to me and you, it was intuitive that people would need to buy computers to work from home. Not everyone has a computer at home. So they were shocked when a lot of these, computer hardware and software, et cetera, and cloud, everything picked up. Wasn't that crazy? But they used the excuse anyways to say, we're probably not going to make a lot of money because people don't have money. But what transpired was the government, the federal government and the Federal Reserve flooded the system with cash. People didn't skip a beat. Even though people weren't working, they got more money from the government and they could borrow more money than they ever had before at cheaper rates than ever before.
Right.
And so they went out and they spent it on a lot of technology.
Yeah.
Now the excuse is gone because the economy is humming pretty good. It's not like, the most amazing economy. We know that there's still 7 million people out of the workforce, but you don't have the excuse that, the world is ending, because it did not end.
Right. Right. No, it did not. And
Thankfully.
Thank God. Knock on wood. I couldn't agree with you more on that topic. Let's talk about chips, because and I want to make a differentiation for everybody here. When I talk about large cap tech, I kind of put chips in a separate category. Chips are chips are a commodity. There's a shortage of chips right now. I actually did a report on it yesterday.
Yeah.
You know me, I tend to, and this, there's a lesson here for everybody. This goes with pot stocks, with chips, with everything. Folks, whenever you're looking at a market and you like it, always look at what helps that market get to where it is. In other words, when you're looking at pot stocks, look at the shovels. Always look at the shovel play. Look at the supplier. So there's this one stock that I'm really bullish on right now. It's 𝗧𝗴𝗀𝗧𝗃. It's not a small stock. You've heard of 𝗧𝗴𝗀𝗧𝗃.
Yeah.
And what they do is they're in the chip business, but what they do is they make packaging, and they make packaging, and they make the boxes for the chips. They don't actually make the chip. So as the chip increases in demand, they service it. You don't have to worry about one specific segment or one specific chip. As long as there's a bigger increase in chips, it's going to happen. And here's the wrinkle, Jeff. You're going to love this. So when we had, and this ties into what you just said, like a crossword puzzle. Okay. So during COVID, right, we didn't know what was going to happen. People were staying at home. People were entertaining themselves. They were buying computers. People were not traveling. So the new car orders for new cars started falling off the cliff, right? Well, all these new cars, believe it or not, a new car, get this, a new car has about 1,000 chips in it, okay? Oh yeah, it's like that. Yeah. And right now, as we know, there's a huge cars are in huge demand right now. Rental agencies, people, everybody wants to travel. Everybody wants to go out. People are paying over market value for cars. It's a huge buyer. It's a huge seller's market for cars. And all these chip companies and all these car companies who need chips right now, they're completely on back order, and they can't produce new cars for next year.
Oh, I know that. Yeah.
Yeah. So this company, what I love about 𝗧𝗴𝗀𝗧𝗃 is this company is it doesn't matter which company is going to take off. They provide, it's the shovel play.
Yeah.
It's the same shovel. It's like grow generation for pot. You have this, you have 𝗧𝗴𝗀𝗧𝗃 for.
I like it. Yeah. You don't have to pick the winner. You don't. And the problem is that, not the problem, but you look at like the best chip companies like NVIDIA or AMD, they're still,
or Applied Materials. Yeah.
Yeah. They're still expensive. They're kind of expensive. Right. And then like the Intels, which have been getting crushed, they're cheap for that's not like, I love doing money links with stocks like that. Like I'm always short Intel somehow. But it's right. It's correct, because they're losing market share nonstop. They're behind the 8 ball on everything. They're still living in a 1990s chip environment, and they haven't realized that these are what you need to make chips for, and gaming systems and Xboxes, et cetera.
The cloud, the cloud, like NVIDIA. Yeah. NVIDIA. NVIDIA's like, Intel should have been NVIDIA.
Yeah. Well, that's the nature of the world, like it's hard to be a nimble, young, world beating company when you become bloated and you become rich and you become a blue chip. It's hard because you become corporate. We've seen that, and over and over again, you become stale, you become non-hungry,
you become bloated. And it's hard to move. It's hard to
it's like a big tanker in the sea that you can't turn. And so like these little speedboats come and they just like weave in and weave out, and
that's it right there. That's the example right there.
So that's, my money link is based a lot on that, like these big bloated companies that are dying and then they can't turn and they can't.
Well, and also with chips, it's a commoditized market. So money links naturally works well for that, because you're going to have a natural degree of correlation because of the commodity element to it.
Can I shift gears for a second and ask you a question?
Please, absolutely.
Other than that 10-year, the thing that I've been really focused on, and like, we discussed this, we had a little instant message to each other yesterday about it. This Chinese news. So there was this Didi. There's an app, a Chinese app, had an IPO last week. And 2 days after they raised billions of dollars in the United States from American and Western investors, Chinese government banned them from being on Chinese systems. Like they got removed. Like you can't use it. And so I looked at that as an incredible shot across the bow at not just their own companies, because they've been messing with Alibaba, they've been messing with Tencent.
You've been on this. You've been on this for a year. You've been talking about this.
I've been saying you can't touch those stocks because these guys don't want those stocks to grow, right? And that's
they don't want to compete with themselves. They
don't care. They're not
privatization. It's right.
They don't want to be Google. They don't want to be Alphabet. They don't want to be Microsoft. They don't.
They want the government. They want the government to be in control, not the big companies.
They don't want those kind of businesses in their country. And they don't. What they really don't want is money leaving. They don't want money leaving China and going to the West. So these guys they're not stupid. They're companies. So they raise money in the deepest, most solid, most efficient capital markets in the world, which are in the United States and in Europe,
right.
Mostly the United States though. And there's a reason for that, because it provides stability, it provides liquidity, it provides transparency. There's a variety of reasons why they do it, because they could raise money. They do raise money in China too. But I'm looking at it like, it's bad for IPOs too. How do you go out and you're going to buy an IPO, and then 2 days later, you have one of the most powerful regimes in the world, which is the Chinese Communist Party. They pull the rug out from under you. These investors took a 30% around 3 days after getting into it.
Right.
Incredible.
Yeah, it's incredible. And again, folks, for those of you who have not been following this, Jeff, he's been on this literally like a dog on a bone. I mean, you've been on this since day one.
It's
and
the geopolitical problem. It's the biggest problem. It used to be you worried about the Soviet Union, or that you're worried about terrorism. And now you got to be worried about the Chinese government messing with Western
their own
systems and capital markets. They're effing with us, man.
Well, it's interesting because they're kind of shooting themselves in the foot on both feet to try. But don't you think if you take away the financial aspect, don't you think it's a very interesting position to be in? It's a very interesting question, right? Think about it from an academic perspective. You've got a country that's trying to, at the same time, they're trying to be the number one powerful country in the world, and they're cutting off the money to get themselves there because their ego and their values and their regime is so engraved into their mind. It's just interesting. I find it very interesting.
I find it interesting, but I also find it as like a cautionary.
It's disturbing.
Yeah, it's. They could do that. They could do what they just did with their own company, with a U.S. company.
Imagine what they could do.
A U.S. company could list, and they could say, "Guess what? You can't do business in China. You can't sell chips in China. You can't produce chips in Taiwan. Guess what? Taiwan is part of China. It's not an independent. Like, what if they? This all, the apple cart feels like it's about to get totally rocked.
It can get and by the way, Apple relies on those chips from Taiwan. Well,
I mean, if they're willing to shank their own best guy, if they're
willing to do that to themselves, what else would they be willing to do?
I look at it anything is possible. And you and I, we like to think in game theory terms. We're like those kind of thinkers. We're analytical like that. So this is a new wild card. I'm still processing what it means to everything. I haven't come to the actual conclusion. I've been worried about it for months and months and months. But this was a particularly nefarious turn that it just took. Because up until this point, they were like, okay, Alibaba, you need to pay $3 billion fine. Alibaba's like, boom, here's your $3 billion. Let's go do some more business. Because, whatever, it's an odd lot to them. But to ban their company from being on apps that just did an IPO, and the timing of it, to time it like that, it was kind of like the equivalent of a smart bomb being dropped in Kabul by the United States Pentagon or something. It was such a delivered target.
It's a political way to limit. It's a political way to control. It's a political way to control the economy. If you want to simplify,
there's so many knockoff effects, right? Think about crypto.
Of course. What does
this mean for Bitcoin?
If this was a third world country that had an economy, a 50th economy in the world, nobody would be thinking. But this is China. This one wrong move and boom, this can derail a huge U.S. company.
There's another way to
the entire chip market.
There's another way to look at it. And you always ask me for a money link at the end, and I'm not going to give you an exact one because I just put one out today, and it's got something in there. And my subscribers deserve the first shot at it. It's
absolutely,
still
of course.
So I'm not going to give the specifics, but I'll give you the broad strokes of it. The other perspective you can take from this is that money is going to flow back into the U.S. because even though they can mess with U.S. companies, it's going to be it's going to be the most protected of the order of that ranking, right? So another aspect that you've seen is the dollar is starting to go strong. I think that's all correlated. I think people are buying dollars to get money out of Asia, and I think it's bullish for crypto too. I'm bullish crypto. at the same time that I'm bullish the dollar, because
that was my question. You're bullish crypto and the dollar at the same time.
Because it's a money flow. It's a money flow out of Asia. Like, listen to me very carefully. And these are trillions of dollars. I'm not talking about like a small thing. Trillions of dollars flowing out of Asia, and it has to find a new home. And that's why
definitely is going to be
Amazon and all these things get bid the way they're getting bid, is because they have the liquidity pool to do it. I'm bearish on emerging markets now. I'm bearish on China. I'm bearish on Asia, and I'm bullish on the US. And that's the broad strokes of a money link.
I think I could figure it out, Jeff. Folks, but if you want specific instructions, information, and if you want to get in on this money link, check out Jeff's money link program. Do you know what the URL is, Jeff? Or just go to Joy of the Trade. You'll find it there.
Go to wealthpress.com. Go to wealthpress.com and look for Jeff Zananeri, and you have all the information right there.
You don't have to go very far. Thank you, Jeff. Yeah, and please do check out what I love about the money link trades, guys. To me, I call them checkmate trades, because they kill so many birds with one stone. You adjust volatility, you have a built-in hedge, you don't have to worry about market direction, and it teaches you the fundamentals between two contrasting positions, which I, as somebody who actually loves the educational part of it, absolutely love. It will give you an unfair advantage, and this is how Wall Street trades. So go to Wealth Press, check out Jeff Zananeri, and check out Money Links. Jeff, this was a wonderful, wonderful session. As usual, we covered a lot of ground. Folks, if you want to reach out to Jeff, if you have any questions, if we touched a chord or a nerve, if you have a clarification on something, it's jeff@joyofthetrade.com. If you want to reach out to me, it's support@marketgeeks.com. Jeff, thank you very, very much. I had a great session.
Thank you. Also, like the video if you watched it on YouTube, and subscribe to wealthpress.com. We do this every week. Every week we do this.
And we'd love to hear your feedback, so please send it to us. Thank you very much for your time. And Jeff, I hope you have a wonderful time on your vacation.
Thank you. Let's go.
Bye, everyone.
Bye-bye.